In today's economic and interest rate environment, securitized credit presents investors with interesting opportunities, encompassing income and capital appreciation potentials. Today, I'm delighted to be joined by Paul Mitchell, Senior Investment Specialist. Together, we will explore why now is the time for securitized credit. So, Paul, could you provide us with an overview of this asset class?
Certainly. So securitized credit typically offers a yield premium compared to similar rated corporate bonds. It also demonstrates a lower correlation with traditional bonds, making it an appealing option for diversifying investment portfolios. Additionally, the majority of securitized credit consists of floating rate fixed income assets, which provides the benefit of dual return drivers. As interest rates rise during a rate hiking cycle, the income derived from the underlying assets becomes the primary driver of returns for securitized credit, making it particularly appealing in higher for longer yield environments. In scenarios where interest rates do decline, possibly later in 2024, securitized credit can additionally present opportunities for credit spread tightening and therefore capital appreciation, serving as another return driver for this asset class. These factors collectively contribute to securitized credit being a compelling investment opportunity available in the current market.
Securitized credit is an asset class that requires a resilient strategy. Could you explain our investment approach when it comes to this particular segment of the market?
So our investment team employs a high-quality strategy in the portfolio management. Rigorous stress testing is conducted on every security, and we avoid investing in agency mortgage-backed securities or legacy residential mortgage-backed securities that were severely affected during the global financial crisis. Even under the most extreme scenarios, the senior tranche securities would remain intact. HSBC Asset Management manages this strategy with one of the industry's largest and most experienced teams, comprising of 11 dedicated securitized credit specialists and an investment forum with an average experience of 31 years. Our expertise in asset-backed securities has enhanced its competitive edge.
Indeed, managed by our securitized credit teams, the HSBC GIF Global Investment Grade Securitized Credit Bond Fund has consistently delivered performance since launched. In 2022, a challenging year amidst the pandemic, securitized credit emerged as the most resilient fixed income asset class, with the relative returns being driven by income. The fund achieved an impressive return of 7.7% in 2023 and earned the Platinum Award in the Global Bond category at the Fund Selector Asia Fund Award Hong Kong 2024. The fund is currently focusing on floating rate securities with AAA, AA, and A ratings. For investors looking for potential regular income, the fund's US dollar monthly distribution share class is currently distributing an annualized dividend yield of around 7%, which is appealing in this market. So, Paul, looking ahead to the second half of 2024, what are the investment prospects for securitized credit in general?
So higher for longer is a perfect scenario for this asset class, allowing investors to potentially benefit from a higher income for a longer period. Now, rate cuts will eventually come, but these are expected to be gradual and manageable for the strategy given the high starting point of income. Rate cut effects are also delayed as these take time for securitizations to reflect the new rate. So these points, coupled with the potential spread tightening or capital appreciation, will be sufficient to compensate investors and deliver attractive returns. Now, interest rates are not going back to zero, but are moving to a more normal level. So securitized credit displays low correlations to traditional fixed income and offers investors additional premium.
Thank you, Paul. In conclusion, the combination of income and capital appreciation potentials in securitized credit offers a favorable outlook. So if you are looking to align your investments with the current interest rate cycle, securitized credit should definitely be on your radar.